take up questions from the students. Any? You can just unmute and ask, right? Yeah, Jayant, you're good to go.
Uh, so yes, sir. So my question is to Archit. Uh, Archit, you mentioned that investment banking acts like a bridge between the VC venture capitalists who want to invest and those firms which want investment, small companies. Uh, uh, I help me understand why is it that they can't approach each other directly? What's the need of an investment bank in between?
Sure, Jen, that's a very good question. So, not just small companies, even larger companies looking for a change in ownership. So, there are promoters of companies who just want some liquidity. They want to sell a part of their company, get some money for that. So, why can't they do it with each other? Why can't they reach out directly? Is because companies are always looking to maximize the financial gains for themselves. So what an investment bank typically does, they have much broader contacts. They know a lot of people in the industry. They know which kind of private equity or venture capital firm or strategic buyer, which means a larger company, would be suited for which kind of firm. And they run a competitive process. So it's like a bidding war of multiple companies, say 10, 12 different buyers fighting amongst each other to buy one company. What that does is that helps that company to get the maximum value it can possibly get. The other reason for this is one reason to maximize the valuation. The second reason is that while making an investment in a company, it's a huge deal. It's not like somebody can just look at a company and give that company 100, $200 million. There's a lot of data exchange. There's something called due diligence which happens. There's a lot of things. How do you want to present your company? How do you want to position your company? There's a lot of engagement that takes place. So for companies, if they are not equipped to do all that themselves, they do not know what to say, when to say, which financial investor is actually interested in buying the company, which financial investor just wants to take data and use it elsewhere to buy another company. And third, they don't have that much bandwidth and that kind of talent to negotiate on the terms of the transaction. That's why it's always better to get an external party who specializes in this, which is the investment bank, and act as a mediator between the transaction. This helps the company focus on what they do best, which is running their own business, maximize the value creation for them, and also reach out to a much larger network of buyers than they would if they would go for it themselves. So that is why investment banks exist, and that is why investment banks exist all across the globe. There's no place where this intermediary is being removed, because it's like a distributor of sorts. It takes a company to the market and then asks the market who wants to invest in this company. That's the reason.
Thank you, but a quick follow up, if allowed by the moderators.
You're good to go.
Yeah.
Yes.
So my question is uh, in the existence of these things like Shark Tank, where you see uh, the founders of company directly approaching investors. Uh, how do you see the system of investment banking? Is it something which is complementing things like what they happen in the Shark Tank, or is it like it is a competitor of sort of investment banking?
Sure. So Shark Tank, first of all, is for early stage companies. Investment banking is for later stage, mostly for later stage companies who are at a larger scale, who want investment for financial gains, who want investment for promoters to get liquidity. And for Shark Tank, those people make the conscious call to go and seek investment from those founders. They're not exploring that if they would have made an investment, they would have gone to the market. Somebody else might have given them a higher valuation. May not have that much skill set as a co owner, but may have given them a higher valuation. But with that said, because information asymmetry is always reducing in the world, and more investment banks are creeping up, there is a fee compression happening. So what investment banks make is a percentage of the transaction value. So that percentage is reducing over time, the volume is increasing. That's why the investment banks are not going out of business. But do you think that, do I think that they will go out of business, or are they a competitor, or are they complementing? So I think it's more of a complementary role, because there's one thing saying yes to a company, but just executing that transaction, there are a lot of legal work, there's a lot of due tax work, there's a lot of diligence work. So to
Right.
have somebody to execute the transaction also requires an investment bank. So trust me, there are situations where the buyer is set, the seller is set. Just to make that transaction happen, they hire an investment bank. So it's
Right.
both of a competitor also, and more of a complementary also in that sense.